But good time then to bring on board our experts and figure out what is it that they're making of the markets right now. Naresh, first to you, what a stupendous turnaround. Finally seems like everyone's back to work with this 350-point uptick on the Nifty.
So it looks like a fresh year with fresh momentum out here, and we are seeing good volumes also today. So that's interesting. And large caps have finally woken up. So that 24,000 mark, which was there on Nifty, has been taken out today. We are yet to take out that 51,800, 59,900 mark on the bank Nifty. If that happens, that confirms more. So this could be a range shift for the short term, 23,800, 900 on the downside. 24,400, 500 now becomes the target on the upside. And today, small caps have not really done 0.5% uptick only over there. So from tomorrow, we need to see if small caps also do well. But structurally, today's tick is a good indication.
Sure is. And Sandeep, hi, afternoon, and wish you a very happy new year, first of all, from all of us.
Same to all of you. Hopefully, you'll have a great year.
Yes, hoping that. But Sandeep, what a comeback then. Nifty's already surpassed that 50 DMA level, and the charge is clearly led by autos and financials all through and through. What's the expectation and why this uptick? Because the auto sales numbers were at best a mixed bag.
See, I think we need to buy when things are get cheaper, and then the uptick comes, and it's very tough to find reasons for that. But the whole point is that I think I'm going into 2025 with a glass half full attitude rather than glass half empty, because although valuations are slightly higher than long-term averages, there are a lot of things which can drive things higher. We could see strong rural recovery. We could see urban recovery come back. We could see continued capex cycle by the government. We could see monetary policy easing. So I think there are factors at play which could play out positively. On the flip side, any significant deceleration in growth globally could impact Indian markets also. But overall, given the fact that last 3 years, if you see the Nifty's average CAGR return is just 8-9%, there is no reason to be excessively negative. So, like you were talking of auto. So, auto stocks, if you look at them, most of them corrected 30 odd percent from the top. Now, once the stocks have done that, then if there is news flow or numbers which indicate that a possible bottom is in place, then the stocks typically tend to move higher. And that's something what we are seeing now. So Maruti numbers were very strong, and the outlook also looks decent. And auto companies also already had the advantage that input price pressures were pretty moderate. So if there's a volume uptick also combined with that, then that creates a huge operating leverage. So I would be positively inclined on autos in general. Uh, M&M continues to do the best, so and that's also near a all-time high, but we continue to hold that. Maruti and Bajaj Auto both look decent to me.
Autos looking at them favorably, and since we are talking about Maruti, hear out what the management had to say, because they're talking about a bit of a revival in the smaller car segment, which was the pain area for them, and the inventory levels have come down.
We did an all-time high record of doing a retail sales of 2,52,693 vehicles. And in fact, in this calendar year also, we did an all-time high record of retailing 17,90,000 vehicles. This has been the highest ever. Before that, in 2018, we did the numbers. Previous high record was in the 2018. Primary, I think all our models, starting from the premium hatch, entry hatch, MPV, SUV, van, all cylinders were fired actually in order to achieve this magical number. Our endeavor is always to offer our customers at a very competitive price, but nevertheless, due to different regulations which are need to be implemented as per the law of the land, we try to, as much as possible, to absorb the prices, but after a certain stage, we need to pass it on to our consumers. So our finance team is examining it, and very soon we are going to announce the price increase for the models. And if you see in this calendar year, the growth was around 4%, 4 to 4.5%. So since we are coming on a high base, it is in line with what was the forecast which was done by the SIAM in the beginning of the year. So I think we should be going steady. In the month of January, starting from 17th onwards, in Delhi, we are going to exhibit our first electric vehicle. We are not only going to showcase the product, but we are going to showcase the overall ecosystem, because we feel just providing the product to the customer is not going to help us, but we need to provide him a complete solution. So be the ecosystem. So I would request the viewers, please come visit us, understand how we are going to change the landscape of the EV industry.
Right, okay, that's the take coming in on autos. Clearly, quite a bit of buoyancy and confidence is what Maruti Suzuki management is showcasing, being clearly felt in the stock price as well as we speak right now. But other than that, of course, while it's all guns blazing, Sandip wanted to analyze the prospects of IT, because soon we're going to be staring at numbers. The street still seems pretty divided on, the services faction of IT. Would you say, is it a complete exit? Look at some of the niche plays, perhaps enablers of AI, or would you say services are those core portfolio themes and you can definitely have some exposure to that?
The IT being a technology sector, there'll always be opportunities for those who can discern and actually come out with companies which could be benefiting due to AI investment, some specific investment in specific sectors, or doing some kind of different work which uh, would be which could grow parabolically. So, but those would not be the top tier IT companies, because they are large, they are largely service driven. So even if they do something innovative, its impact on their overall business will be moderate. As things stand now, all the Accenture's numbers did indicate some sort of uptick, but uh, it will not be so significant to drive stocks substantially higher. Now, one thing which could come to the benefit of these IT companies, which was missing for the last one full year, would be the weakness of the rupee. Like the rupee was down just 1.5% over a year till November end. And after that, it's declined by nearly 2%. And that aids their operating profit margins, and which was not there in the last 1 year. So I think that could help their profitability overall. So, and that is something which could possibly create a positive uptick. On pure business side, I don't see any significant uptick in the near term.
That dollar strength, which is causing a bit of an FII outflow in any case from India, might just be supportive of some of these export-oriented sectors like IT and pharma. But on that note, slipping into a very short break, great momentum at play. Don't go anywhere. We'll track that and perhaps 24,200 when we come back.